Like your stuff, greetings from Finland.
Thanks, Powery. You rock.
This is a cool app, guys, if you're trying to get into trading. Just your iPhone app. And you know, I like the stocks because there's two investments out of Rich Dad Poor Dad, you know, that book. And the easiest two to get into, no, the easiest one to get into is stocks, obviously. And the hardest one is probably real estate, just because the capital, the buy-in is so high in that. And at least with stocks, to a certain extent, you have liquidity, just in case you need to pull your money out. Obviously, if the stock's down 20%, it's not a good time to pull out, like last month with Apple. But in the most part, you can. Unlike real estate, you know, it's really hard to cash out of a real estate apartment in less than 6 months. And with real estate, you know, all your eggs are essentially in one basket. You can't really diversify if you own one property. Now, if you own a building or you own 3 or 4, that's a different story. But I'm talking, you know, small term. Ooh, Starbucks went up. Small time stuff. So anyway, out of the ranks of Clark's financial advice that is totally unsolicited, and I have no credentials in this whatsoever, so take this all with a grain of salt. Urban Outfitters. Ooh, look at that. So that's the trend over a year. It's locked. Oh, no, it's not. Okay, so this is why this app is cool. Okay, so that's the trend over a year. So it started, and I always look at percentages, guys. I don't really do anything other than percentages. So it started, I like the 1 year chart if I'm just looking at a company. Let's do them over 10 years. Okay, so it looked like they IPO'd in 2006, and there we are in 2016. So they've had a roller coaster. Look at all that. Now these are generally around market trends, probably. So consumer trends, like the 2008 when we went down. Obviously, people stopped buying trendy urban clothes. And if we go to a year, some of these peaks and valleys are from earnings reports every quarter. So every quarter, a company has to put out a statement like, hey, here's what we're doing this quarter. Here's how much we made. Here's how much we lost. And here's our plans. And so those are really hot times to trade. For instance, with Netflix, last year I bought my plane ticket because I called their earnings report. I'm like, you know what, Netflix is gonna have a good earning. I'm already in, but I'll put an extra $3,000 in Netflix right before, I think it was Q3. And sure enough, they went up 30% the next day, and then I cashed out my initial $3,000, took the profit, paid short-term capital gains, and had an extra $500. And I bought my plane ticket to Thailand and never looked back. So that's why stocks are cool. Of course, you gotta do a little research. But anyway, this is Urban Outfitters. Okay, all right. So actually, the way you think about that is like, oh, why would you ever buy this company? They suck. They're going down. Look at what they've been doing. Well, look, it depends if you're in it for the long term or you're just trying to ride it out and make some money. Had you bought down here in October, you're essentially getting them at a discount from $47 all the way down to $27. So you're getting them at a $20 a share discount. Those are what those numbers mean. That's per share. So if the number's up here and you want to buy one share, guys, that's 47 bucks. If the line's down here and you want to buy one share, that's 20 bucks. Okay, and then you get whatever percentage it goes up. So if 20 shares go up, you know, 10% in 1 year, at the end of that year, you're gonna have $22. Okay, see how that works? You know, you're getting them at a discount if you buy right there. So now they're up at 33 bucks, which, let's look at the 6-month trend. You want to start zooming in if you're thinking, okay, I like this company, I want to find a time to buy. And so they went down, and see how they're going up, up, up. So I'm not sure what that is. Obviously, before buying, you want to do some research. And so this is interesting, actually. Look at that, 3 months. See, if you just saw this chart, you'd be like, man, this company's doing awesome. I should get in on that. And that's the wrong mentality. Everyone knows the ism, buy low, sell high. That is so hard to follow. It takes a lot of discipline, guys. But most importantly, you know, I like stocks because they're kind of mere life. Like, I'm going really deep philosophical on you. But with the stock market, you know, we have consistency as one of the main drivers, right? If you freak out every single time things go astray or an earnings report goes south, you're gonna lose money, and lots of it. But likewise, if you're too stubborn and say, you know what, nope, this is turning around, I'm in it for the long run, I'm never gonna move, you're gonna miss a lot of other opportunities. So you gotta have that middle path between being consistent and being stubborn. You see what I mean? You can't be a flip-flop, and you can't be just a rock who doesn't move at all. You gotta like the waves of the ocean. See how that's all moving? It's all moving. And so, for instance, last one before we get going on our walk here, if you bought in January and then you sold, let's just say in February, and then it dipped down a little, and you bought again and you sold up here. See how that's 2 times you can make money instead of just buying here and selling here. That's 1 time. And that gets into a little more advanced strategy. You have to have a lot of time on your hands. That's not really day trading because that's over months, but and then you pay short-term capital gains, which I think is like 25% of all your earnings versus, 12% of all your earnings if you hold a stock over a year, because Uncle Sam is a thief and takes everything. But if you're ever looking to get into stocks, it's really fun, and we could go over this real quick. So this is the open. What this means right here is what they opened at. So today, Whole Foods is what we're looking at right now, which I was glad I didn't buy. They tanked. I don't know if they're bouncing back real quick. Okay, kind of. I thought about buying them. Anyway, Whole Foods opened at $34 a share today. So boom, ticker goes on, I think at 6 a.m. Pacific time. They premiered at 34 bucks. And the high today, which means the max price they got to, was 34.07. Okay, the lowest price they got to, so remember that chart, today only, was 32 bucks. And the PE kind of tells you that's price per earnings. It's a little more of an advanced statistic we're not going to get into. Basically tells you a little bit of the risk with the stock. I think it's higher PE. It means higher risk, but also what is higher risk, higher reward. Market cap, that's how much of the share is on the market. So they're basically how much the company's valued at. So $10.73 billion, which, sounds like a lot, but if we go to Apple, that's a $556 billion company. Celgene, $78 billion. Starbucks isn't even that big. It's, only $84 billion, right? Google, Monster, $448 billion. You get the point. Back to Whole Foods. And then these are really important. These are 52 high and 52 low. So it's basically the same thing, the open and high and low, but over the course of a year. So the most it's gotten to over the year was 54 bucks. The lowest it ever got was 28 bucks. And so this is a little bit over here on the last tab where you can do research and figure out kind of articles trending on Whole Foods over there. And the same thing goes for like gold. If I wanted to look at gold, you can buy the GLD, or if I wanted to look at Starbucks, All right, a little bit of finances with Clark. Thanks for playing. Real quick, guys, this is Charles Schwab. This is the broker I use. This is basically your middleman in between you and the stocks. This is just another bank account, and so you put money in this bank account only except you can use the money to trade in the stock market. I'm not sure if you can do that at a normal bank account. I think you can, but I really like Schwab. They have really low fees, and I've read a lot about him and like the story and everything. So this will charge you, I think, $7 each way every time you trade. So if you want to trade a stock, let's just say the Whole Foods stock, for 30 bucks, it's going to cost us 37 to buy in. Does that make sense? And that's only a one-time fee. You don't pay that every single share. And then if we want to sell Whole Foods, I think it takes $7. I'm not sure. You can get a day trading account, but remember, I don't do day trading, which means doesn't necessarily mean you can't if you really do your research, but that's risky if you don't know what you're doing. Always, always, always do your research, educate yourself. Remember, never borrow money to get into the stock market. That's how you go beyond broke. Okay, that's risky. And the second is never go off tips of your friends. All right, let me tell you, the only person I listen to in the stocks is my dad. Okay, because he absolutely loves us and taught me everything in the market. But anyway, and he's super conservative. So when he thinks something's gonna happen, it's like guaranteed, because he never moves unless it's like guaranteed. But when you see people screaming buttons, pushing them online, and buy, sell, it might be more harmful than beneficial, because unless you have 20, 30 hours a week to dedicate towards that and checking everything, you could be buying a stock and selling it like that and lose money, versus if you bought it and held it, you would have made more money doing nothing than trying to work it so much. So sometimes the path of least resistance gets you the best results. Anyway, ramble. Thanks for watching Finances with Clark. Stop settling, start living. Happy trading, and let me know in the comments if you have any tips, okay? Thanks.